Good morning, ladies and gentlemen, and welcome back to Morning Markets. Today I've got the delight to be joined by our Director of Investment Strategy and Lead Portfolio Manager of the True Potential Portfolios, Chris Leyland. Today we're going to be talking about inflation here in the UK and here over in the US. Over the last 24 hours, lots of numbers come out. So, good morning, Chris. Can you talk us through the numbers?
Yeah, good morning, Paul, and good morning, everybody. So maybe we start off with the US. So the US inflation figures came out yesterday afternoon. So the headline figure that maybe a lot of you will have seen on BBC News or the various different news services is that US inflation came in at 8.5%. So let's put that into context. So that was ahead of last month's figure of 7.9%. And it was also ahead of forecasts as well. So forecasts were 8.3%. Again, the headlines around that will be that this is the highest level of inflation in 40 years. Yeah. So if we then move to the UK, so these numbers have just come out this morning. So this really is kind of hot off the press. So inflation came in at 7% for March year on year. So that's above last month's figure of 6.2%. And it's ahead of forecasters' expectations of 6.7%. And again, for anyone who's read any of the news services, really the headline there is that is a 30-year high. So really, what can you take from that? Well, inflation figures are high.
So when you look into the details, though, and the underlying components, what's really driving these numbers? Why are they so high?
Yeah, I think really there's two things that are driving the numbers. So firstly, there is the cost of fuel, and also there is the cost of food as well. So if you look in the US, there was an 18.3% jump in petrol prices. If you look at food was up 1% over the month. And again, fairly similar-ish moves in the UK overall. I guess, why is that? Well, you've had the conflict in Ukraine. What you're seeing is a lot of challenges on the supply side. So remember, when you look at any price, it's determined by supply and demand overall. And what you're seeing is the challenges on the supply side are pushing those prices up. I think one thing, though, that was quite interesting on the US print, I know this is something that we've been talking about a lot as a team, is actually not everything rose, and you're starting to see some of the prices of the components of the inflation print coming down. It's probably the most interesting one there would be used car prices, which have come down 3.8% over the month. And remember, last year when everyone was talking about that big shortage of semiconductors, it meant that it was more difficult to buy a new car. There was really long lead times to buy a new car, so people were buying used cars instead. It was pushing up those prices. It's interesting that you've seen that drop come through overall, but we can talk a little bit about that later on.
Yeah, and you've already seen oil prices come off from $120 down to around $100. So it's already starting to moderate in the energy, and that's thinking about in China where you've got COVID restrictions, and that's impacting on supply chains as well. But I suppose we focus a lot on inflation. Can you maybe discuss why inflation is so important?
Yeah, it's weird. I think, for those that avidly watch morning markets, I'm pretty sure over the last, 6 months, something like that, you've probably seen a significant percentage of what we talk about is really around inflation. So why is inflation important? So what you have now is inflation at high levels. So central banks, so if we focus still on the UK, so the Bank of England, the US, the Federal Reserve, they have inflation targets, and those targets are 2%. Now, obviously the numbers that I gave you before are significantly higher than that overall. Now, what does that mean? It means that both the US and UK central banks will raise interest rates to combat that higher level of inflation. So what they're doing there is they're raising interest rates to reduce demand overall, which then brings those prices down. So brings the prices of goods and services down overall. And I think, why is it so important? Why are we talking about it so much? Firstly, we've been in an environment for many, many years of very low inflation. So you're in a very differentiated environment now, which many investors aren't really used to. But I think, sticking with investing is that actually a lot of assets work better in certain types of environments. So certainly what I think about, and I know what you think about a lot as well, is really which assets work better in an inflationary environment, and how do we get that for the people who are watching the true potential portfolios that you're invested in. How do we think about that asset mix? So for us, that's why really inflation right now is arguably the key data point.
That's great, Chris. And I suppose as portfolio manager of the true potential portfolios, what is your overall view of where inflation is going?
Yeah, sure. So I think, this hopefully is the most important part of the video, which is really where do we see inflation moving forward? And I'll stick mostly with the US because arguably the US is more important than the UK for global investors. So right now, we know what the figure is. We've seen that figure of 8.5%. We believe that we're close to the peak. So what we see moving forward is inflation falling back from the significant highs that we've seen right now. That might not be this month. It might, move even a little bit higher next month. But certainly as we move through the year, we see inflation falling back overall. Now, the big question is, where does that end up? And I know we are very, very lucky in that we speak to a lot of high-level, world-class fund managers. Yeah. And I think when we think as a consensus, their view is that inflation will land higher than the central bank targets as we move later this year. But the reality is it will come down. And again, one of the things that I do think is quite interesting is you are seeing some of the factors that were contributing so highly to inflation prints, say like late last year, you're starting to see them roll over. So again, things like the used car prices that I talked about earlier, to me that's really, really important overall. And if we move to the UK, probably the picture is a little bit more cloudy. Why is that? It's because you've got the energy price caps that have come off, but will come off in October as well. So in that respect, we see inflation probably staying higher for a little bit longer. But again, we see after that inflation starting to come back down to, I don't know if this is the right word, more sensible levels. Maybe that is the right word. But the reality is that, we are in a higher inflation environment compared to, say, 2019. But the other thing I would say as well is, inflation's normal. It's normal for goods and prices to go up every year. It might not feel like it, but it's normal for us to get paid more every year. That's a standard part of life. So in that sense, a central bank target of 2%, you should be hitting that 2% target. And if we look back pre-COVID, really that hasn't happened. So again, a slightly higher inflation environment. And for us, it's looking at those assets that work well in that environment.
That's great, Chris. Thank you very much. And thank you for watching. We'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.